Hi, this is Mike Morton. I'm here with Todd Johnson and Mike Ray, and this is our podcast number 4 for our Big Deal Group. It is February 22nd, and we're going to talk about the market this week, and we're going to cover metal prices, Mike Ray's sniper trade, our top 10 lists, and a couple other ideas. First, we'll start with Mike and what happened with the markets this week.
Hi, everybody. It's Mike Ray. Boy, another interesting week. Looking through the charts, looking at SPY. We started SPY somewhere, I think closed Friday at 183, and after some ups and downs, and on this Friday we actually ended pretty much right at 184. So it wasn't a perfectly flat type of a move. We did move up, almost to 185, and then we had a sharp sell off there on Thursday down to 183, but pretty flat. Like the week before, we were thinking that this is probably what was going to happen. Markets were maybe going to just, because they don't know what else to do, grind a little bit higher. What do you think, Mr. Johnson? How do you feel about what the markets did this week?
Hi, Mike. Yeah, I agree with you.
Great. We're still warming him up. You got to bring him out of the cold thaw.
No, you're right. Traditionally, we don't look, or I don't look at the SPY or the broad markets. I try to identify key stocks or key sectors, and less so on the broad markets. But you make some great points.
Right. So basically, I guess for the market, we didn't see a lot of action. Although if we take it out a little bit further, go back to the beginning of February where we had a low of, at least on SPY, 174. Well, we're up 10 to 184 now. So it kind of reflects the way our portfolio works. We have a lot of bulls, we got a lot of bear stuff. So milking the premium off a lot of the option trades is kind of the name of the game. So that's all really I got this week, Mike, for the markets. So I don't just not anything terribly exciting.
No, it's better than going down.
Better than going down.
Todd, let's talk about this week, what happened with metal prices.
My view on gold and metals is our Cashin's view that one should own as much as is required to bribe the border agents. But we do have a GLD position that's working out nicely. GLD closed at around 127.60, and we have a calendar spread with selling the weekly calls at 126, but we also own the 130 strike price calls that expire out in April. So that position is working nicely, and the stocks are moving. The gold stocks, silver stocks, all the miners are moving pretty good. So yeah, I like it, and I'm not a gold bug by any means, but it's a good way to own a different asset class, and we have that. And I like to see GLD go up when we own the calls.
Yeah, this is Mike. Yeah, and if you move it out a little further in the timeline.
What timeline are you looking at?
Well, I'm going out a month, which is really nothing, I understand. But that's where you see gold's major move. Right at the end of January, gold is, and I'm talking about GLD instead of gold, and it was right at 120. That's what GLD was. And then as we move today, we have a pretty big move up all the way to 128. And then another thing that would probably help is George Soros. I don't know if you saw that news. One of his major positions was he was getting it not so much into gold, but ABX. So he kind of liked the miner too. So I think
the lowest cost producer at 1,100 all-in costs.
Yes.
Per ounce.
It's just interesting to see that all gold's went out of favor at least all last year. No one liked it. Everybody hated it. And now we're seeing a little bounce back. So it's good to see, at least for our big deal group, that we have, that trade on. I know the private group has a junior miner in it that it's going to do well too. So yeah, I think the gold is doing well. I think the metals are doing just fine.
They are on the rebound. All right, Mike, this week got his first sniper trade out. I hope everybody had a chance to look at it and do it if you felt comfortable. And so Mike, let's talk about your sniper trade.
Yes, sniper trade. First sniper trade out of the barrel, I guess, so to say.
Well, what again is the sniper trade?
What is the sniper trade? Sniper trades, like we said before, is
In 10 words or less, Mike. I do have a schedule as I tap my watch.
Pass then.
No, I'm teasing.
Yeah, I know. Sniper trades are just they're usually just a quick option trades. They could be, they could be on the put side, they could be on the call side, and it's just a way that we can enter a trade and get a small credit. It's not establishing a real long position or something that's real, at the money, at the strikes. We're trying to find these trades there's a very high probability that we'll win. This week's trade was on Twitter, and so basically we looked at Twitter real close. We looked at where we thought the pinning action might happen. We looked at the news. We looked at how it was flowing, and what we did is we sold $54 puts. I think we sold 7 of them, and we bought 52. I think we collected, depending when people entered it. By the time I get these out, when people execute, it can move. Some I know probably got in, and they got, I think we called for $200, but I think some people even did, $253, $350, depending when they got in. And then we were out by Friday. It was quick. We were in Wednesday, out by Friday, and so we netted about. I'll just stay on the low end. Let's just say $200. So, and it was successful. It was quick. It was successful. So that paid for at least a month or two of a lot of people's subscriptions. So it did what it was supposed to do. Once again, it's not a trading discipline where we really want to focus on this to further the portfolio. It's kind of just this side trade we do just to try to make sure that we get a little extra cash rolling in to help people pay for their subscriptions. I noticed on the forum, a lot of people did do it, and a lot of people were happy, and then there were some people who did not want to do the sniper trade, which is perfectly fine because this is not a major part of the of how we're doing big deal.
Well, in private, you've said that you're angry at those people.
No, that's so true. No, don't listen to that.
Okay.
So no,
Okay.
no, and you know what? And I understand people's hesitance because they think I don't want to go after $200. Why do I want to risk? And I think the total risk on this trade was $1,100 if it really went bad. And why do I want to risk $1,100 for $200? Well, and I get that. There is a risk, but if you look at it from the point of it's not just a flip of a coin whether it's going to work or not. There's a lot of back testing and a lot of other things that are going on. So the chances of it succeeding we thought were very high. So, but like I said, if some people don't feel comfortable doing it, or we pick a name that they're already heavily invested in, let's say on the big deal side or on their own, and they don't want to take on the added risk, it's perfectly understandable. These things come up all the time, so if you miss one, it's no big deal. Or you just flat out don't want to do it, it's no big deal. But this week's trade was a winner. Sniper success.
Yes.
So there's not an ongoing grudge against the people who criticized your strategy?
No.
Okay.
Not at all. It's, and I understand. No grudge. I mean, people are different. People do different things, and if they want the sniper trades and they like them, great. If it's not their thing, like I said, it's not. If you don't do the sniper trades, it's not going to affect your returns by any major part of the portfolio. It's just a side service we're doing to try to help you pay for the service.
Well, God bless you. That sounds like you have a good intention with the sniper trade.
Yes, even though the name is Sniper. Yes, I have good intentions.
And it has been with picking up nickels and sniper trades, I think for the last, 5-6 weeks, you've been successful every single week.
Yeah, the picking up nickels, for all of you who don't know, for our private group, we run a similar service called Picking Up Nickels. It's similar. It's maybe, if I guess, a tad more aggressive, maybe, but just a tad. So it's something similar, and we've been doing that on the Picking Up Nickels side, I think, for 5 weeks.
Yep.
And for 5 weeks, every trade has been a winner so far.
So how much is that netted, approximately?
Picking up nickels. Well, depending on, and just so you know, the way the sniper and the picking up nickels work, if you have markets that are, out of whack, or they're trading on emotion, and a lot of the statistical analysis and the logic kind of breaks down, we're not going to enter those trades. So I'm going to say for picking up nickels, if we did them all, they're probably, for the last 5 weeks, maybe up to maybe 800, maybe to 1,000, depending, because everybody gets these different trades. Because when I send these trades out, by the time that people get them and they execute them, I mean, the trade that I've sent out could have changed a little bit. So, I mean, some got more, some got less. So I'm going to say probably $200, $400, $800 to $900 maybe in the last 5 weeks.
Yeah,
So
you can't argue with that.
Some on the forum may argue with that, or have a different point of view. But
that's fine.
It's good to have a
Yes.
discussion and debate.
Yes.
It's a tool.
It's a tool.
If they want to use it, they can use it. If they choose not to, that's fine too.
And it might, and, you know, like I said, it might be more. I'm doing conservative around 8. I mean, it could be, you know, some of these guys, I'm sure, you know, if they upped their positions or they did something different, maybe 1,200 if some of them did it, you know. So I can't give you exactly what they made because it moves. But let's put it, it's positive. We haven't lost one yet. We had a trouble with one coming down to the last minute, but if we waited last minute, it worked out fine. So, but yeah, success.
Excellent. All right. Some of you have asked for a top 10 list that's come in through some emails. We don't have a top 10 per se this week. We have a top 7 that you guys received that Todd sent out earlier this week. And just I thought it was a nice summary of what was going on, or if you were a little confused on what you should be doing. It's kind of a backup plan. And I'll let Mike Ray walk us down the top 10 or top 7 for this week.
Yeah, let me tell you how this all occurred. I was on the forum one night having discussions, and for those of you who don't use the forum for a big deal, I mean, it's actually a valuable tool. I mean, you can pick up a lot of information in there. But anyways, on the forum, we had some discussion, and someone was asking about a top 10. And, you know, we kind of went back and forth and discussed it. And, you know, coming up with a top 10 is different. I mean, and the reason I say that is a lot of people on the forum, if you're getting the newsletter, DividendLab, you know, you are getting some of our best picks, for getting stocks with dividends and covered calls and puts. If you are in the big deal group and you're trading options, you know, it's kind of a different service. You're moving a lot of options around. If you come up with a top 10, now you're starting to, intermesh, your top 10, equities as opposed to the top 10 option trades, and you start to get this mesh again. That's kind of like what our private group is doing. So coming up, we sat down and trying to come up with the top 10, it's hard, but we know that's what the customers want. So, Todd was gracious enough, thank you, Todd, to put up, and he put up his top 7 ideas. We're going to have to refine how we want to put this out to everybody. But what he put out, though, I think was solid. And let me let him talk about some of that stuff a little. And it's not necessarily, you're not going to get the top 10 stocks to buy right now, because of that, how we're structured between Big Deal, DividendLab, and even the private group. So basically, I think, Todd, what you're coming up with is the top 7, not stocks, but the top 7 ideas you need to capitalize on. Am I off base?
Yes.
Clearly.
No, my top 10 this week is top 7 because I could not formulate 3 additional ideas. So I have a top 7 this week as my first top 10 list. And you were focusing upon what context, Mike?
Well, people, the people that want top 10, top 7, whatever they want, basically I think what the original idea is they wanted a list of the top 10 stocks, or maybe even the top 10 option trades they should enter in right now, because, our lists are pretty extensive. And
so you're assuming that they have never bought any of the prior positions that have been going on?
Could be. I think from the way that it looked like it was on the forum, they were looking for someone maybe who was coming in new, had a position sheet that was really long, and where should they start? I mean, I think that's kind of where it was going. Although I could see it being used for other purposes. Once you put a top 10 list out there, where's it going to go? It could go anywhere. So I think and then like I said, the different disciplines between DividendLab, who are doing equities, covered calls, and protective puts, as opposed to the Big Deal, who has a very different methodology moving with options. A top 10, trying to mesh a top 10 list becomes tough. So I think the top the top 7 are not really equity positions, but it's the top 10, or as we have in this one, the top 7 things that you need to be looking at. It does include equity positions, but like for example, number 1, and I love this, is hedge. It's not an equity position, it's hedge. I mean, and I think that one will probably stay on the top one for forever, or at least as long as the service keeps going.
Yeah, well, the markets are at all-time highs. It's not an ideal time to buy many stocks that have gone up 500% in the past year, and that's a problem. This week we sold quite a few positions. A lot of the biotech names, for example, Jazz and Tesla, some Tesla calls that we had, and VRX had gone up quite a bit. ACT had gone up quite a bit. We kept Celgene, and we added one new gastro biotech name. And so one does not want to buy at the highs, and maybe one wants to short at the highs. That would be the preferable way. But I added the ETJ, which is simple and going to make money. It's not going to, that's about it. That's what it's going to do, is pay a dividend and be significant. There's going to be a clear time to exit the position, and I'm looking to make more profits than what ETJ offers. But nevertheless, I put that there because the markets are at an all-time high. But then NRF has a spinoff coming, so we have, for the most part, a synthetic long in NRF, waiting for the asset management spinoff to occur. Their dividend continues to increase by 1 to 2 pennies per quarter. So NRF is, really doing a good job at providing returns to shareholders. And Tiva, we established a multi-level position with a calendar call spread and a bull put spread. And for those people that don't trade options, then you would ignore this information. But we're trying to make money, and options are a tool to make money. And if one doesn't want to use a certain tool, then one is happy not using that tool.
Well, let me do a side point on that. I mean that's good. I don't want to take away from the top 10 list.
Oh no, actually, I only have 7 this week.
7.
He's going to stretch a little bit.
I'm gonna stretch it out.
I do have 7.
Yeah. For those of you out there that don't want to use options, and that you just want basically stock picking, I just want you to tell me what stock to buy, and I don't want anything to do with options. I mean, you're really, at this point of the game, really handicapping yourself and your portfolio. I've always told people it's like building a house. It's like if you're going to build a house and I take away a hammer, can you get the house built? Sure, you can get the house built, but you're taking away one of these vital things you're going to need to build the house. Your house might look a little funny, but you can get one built. But why would you do that? I mean, options are something that there is a learning curve, but it's not that bad. If I can learn it, anyone can learn it, Todd. So, but
was that a question?
Yes, but we are on a time constraint. So, but I mean, if you're not going to use options, I mean, you're going to have a hard time. You're just going to have a hard time all the way around. You have to dig in. You got to learn how to use them. I'm sorry, I just had to get that in there.
At least one should learn how to use protective puts and selling covered calls, I would assume.
At the basic, at the basic level, you should understand that. Those two concepts, they're not hard to understand. But if you're just running out there and you're just buying longs and you have no protective puts, no covered calls to cover you, you're just setting yourself up. But sorry to take away. That's just my 2 cents.
From my top 7.
From your top 7.
Yes.
So, and then that Tiva trade. I think that what was interesting in that Tiva trade, this could almost even segue into that.
Excellent.
Yes, the Tiva trade was, which was for the option group, but even for everybody out there who's just, let's just say, the DividendLab, and you're just doing the equities. This would be a great example. One of the things I think that first everybody saw in the Tiva trade was these monstrous amount of options that started to trade this week that were very uncharacteristic from what Teva normally does. I think that was the first tip, that something...
How significant in terms of the normal volume versus how many did trade?
I wish I had it right here in front of me. I don't have it.
Guess, or do you have a guesstimate?
Yeah, I remember what I remember seeing is, and I think it was along about Wednesday, I couldn't quite tell, but all of a sudden, these gargantuan numbers of trades started happening. They started happening in March, and then they extended out several months, and they were buying call options deep in the money. And I think at one point, I think was it March, they were buying in the money. I think they bought like 80,000 calls or something like that. Deep in the money, really uncharacteristic of what you ever see in this stock.
Why would they do that?
Exactly. Why would they do that? If you're going to have a bunch of call buying like this, and people start jumping into options, and they're not, and they're buying the expensive ones, they're not buying the cheap ones. I mean, there's a lot of reasons they could do it, but one reason they could do it is they think they're going to see a significant increase in the stock price. Is what that's why they're doing it. For one reason, at least that's what we think we're seeing in Teva. So, are you seeing a Teva buyout? I don't know. Are you seeing something that is going to happen in Teva here real soon? That's going to, I don't know, but whoever it is or whoever did do it, they probably know something, because they spent a pretty penny to put those trades on. It was not cheap, and people don't usually tend to do that.
Looks like they just paid a dividend on February 20th too.
Mm-hmm. And
34 cents.
They'll do that too, but it's interesting because you'll see them on the option trades rotate around dividends, but that's not what we're really looking at here. We're looking at lots and lots of calls coming on, not just this month, which could have been part of the dividend, but you saw them extend way out. So I think Teva is going to be an interesting play. I like the play you put on. Let's see what happens with it. But this is just maybe to segue in is if you're not going to trade options, then you would have missed this whole dynamic of what might be going on in Teva. So.
And Teva did move up in price after the call buying was done. After the third parties were buying that, it closed at looks like 48.45.
I think the call buying started. It was down. It was at around 46, I think, somewhere. And so there was a good price movement up when once the call buying started to happen. Of course, everybody gets to see this call buying. There's lots of services that that pick this kind of stuff up. But
Mr. Morton just rolled out a Teva chart to quote Led Zeppelin, stairway to heaven. Every day going up and up and up.
Yep, there is something is definitely brewing.
Yeah.
What it is, I don't know, but we're there. We're in with it. Yeah, he has a chart showing us on Friday at 44, and we closed at 48.50, somewhere around there. It looks like. So interesting. Sorry to take away. Let me let you keep going.
Oh no, thank you, Mike. Number 5 is Oak, OAK. We've owned that for a while, and that is one of the key players is Howard Marks, and maybe a lot of people have seen the Bloomberg video where Howard Marks indicated that his favorite Howard is another Howard Marks who was put into prison for narcotic smuggling and selling. And Mr. Marks did actually meet the British Mr. Marks. But it was just a fascinating interview. And Oak, symbol OAK, they buy debt at a discount that is non-agency guaranteed, so it's not secured by any federal entity, and they're pretty good at doing what they do, and so it's a very defensive position, paying a distribution as an MLP at the S&P 500, multi-year highs or all-time highs. And number 6, as we know, we've sold many of those positions or reduced our positions, and on the options side, we've adjusted the positions to lock in profits on ACT or GILD, Jazz, VRX, Tesla. Number 7, home away, symbol away, AWAY, is skyrocketed like a coiled spring would do. Great earning. And Yelp has gone up. Facebook continues to go up. Priceline beat their numbers. Position on Priceline was profitable. I think we made 32 or 3,800 on Priceline, closing above 1,300 on Friday, which was yesterday. And QIHU, the Chinese play, has really gone up. CNQ, a Keystone play, has gone up. Despite, I think it was the Nebraska, I don't know if it was the governor, but had some negative comments on the Keystone play. Blunk has gone up, and, just when names go up, just rule of thumb is to take some profits. And so that's why oftentimes it's tough to do a top 10, because you have to evaluate interest rates, the economy, job growth, Obamacare, are taxes going up or down? Is job growth increasing, decreasing? How are the emerging markets doing? And it's not something that, I'm not Joe Motley Fool and just can spit out a stock and hope it goes up. People have to think for themselves and read information and hedge your positions and learn. So, I recommend people go to Motley Fool if they just want somebody to say, buy stock ABC, and, intellectually embarrassing to me. But for some people, it's a good thing, but not for me. So hopefully that addresses my top 10 for this week, also known, AKA, as my top 7 for this week.
You're 30% deficient on that deal, but yeah. So, anyways, I think that's the way we're gonna handle this with Todd, with that kind of bewildered look in his eye. But anyways, so the top 10, although obviously was the top 7 with a 30% deficiency rate.
Is there any way that instead of saying deficiency, that you can put it in context of a positive light? Whereas I have an opportunity, make it a full 10 next week. And
Or you could do 13 and then make up for the 3.
yeah.
Yes.
Well,
Yeah.
that's a negative number. Bad
Boy.
karma. So.
Bad karma. Okay, so anyways, I think that's the way we're going to handle the request for the top 10. Like Todd kind of mentioned, it will be a mesh of some of the options, and there will be equities and that kind of stuff as well. So.
And there was a question on the MasterCard position.
Okay.
We put on a MasterCard calendar put spread, as you well know, and I'll let you take that one away.
No. I think that one was probably more directed at you, I think.
Okay. Well, we have a position in Visa, which has less exposure to the foreign markets, and MasterCard has more exposure to the international markets, China specifically. And MasterCard on their conference call indicated that the China slowdown wasn't impacting earnings. So I wanted to, if we're going to have a bullish position on Visa, I wanted to add also a MasterCard position as a hedge against our bullish position on Visa, because the markets are at all-time highs, and when markets go down, people lose money, and we don't want that. So, having said that, MasterCard, after the 10-for-1 split last month, it is trading, in the high, 75, 76 price range. On MasterCard, we have a diagonal calendar put spread where we own April puts with a strike price of $76.50, which was at the money when I placed the trade. Currently, it's at 75.7, but we sold the weekly $77 strike puts to earn income on the expectation that the MasterCard will continue to go down or to offset any losses in Visa. And one could also do this by owning American Express, which has a more confined market share, working with Costco and other entities, versus MasterCard and Visa work with so many businesses, or all businesses, that take their cards for a fee. American Express had a great quarter, Visa had a good quarter, MasterCard did not. So that's why we have a bearish position on MasterCard and on General Motors, which had bad earnings. For some reason, they continue to have bad earnings, where other auto companies at some point in their life cycle have good earnings. General Motors continues to have bad earnings. So that's why we have the bearish position on General Motors. And for the time being, we have the bearish position on MasterCard because of the Chinese economic slowdown. And as far as the strike price, it was just simply based upon, buying at the money. And April will allow us to benefit from the rich premiums when they next report their earnings.
All right, thank you, Todd. Finally, for the Big Deal Group, we want to talk a little bit about the Quant Screens and how Folio FN fits into that, and I'll let Mike Ray talk to that.
Yeah, this is Mike. This is kind of yet another interesting dynamic that has fed through the forum. As you know, and well, probably as you don't know, the private group that we're working with, we are now pretty active into Quant Screens. And I think a lot of that excitement, a lot of that, what's going on over there, bleeds over into some of our other groups. And there's been a lot of questions about Quant Screens. What are Quant Screens? How do I do Quant Screens? And, basically, without going into a lot of it, Quant Screens is basically a way where we have certain measures and certain criteria that are run up against a specific number of stocks, and then basically you're getting the computer spitting out, buy these, sell this, buy these. It takes all the emotion out, takes all the, analysis out, and you're focused on very specific things. We're doing that in the private group. We started, I would say, 4 or 5 weeks ago, and it's working out tremendously. We're not doing that, obviously, down in DividendLab, because it is, I wouldn't call it high frequency trading, but these names can trade quick and fast. There's a lot of rebalancing, and there's a lot of this. Todd, do you want to talk anything about quants just in general and AAII maybe?
Well, when you say that they trade fast, every week there could be positions that are removed or added from the specific quant screen.
Exactly.
And AAII.com, which I've talked about quite a bit on the forum, lists different quant screens. If you go to the website, it's a nonprofit site, and it highlights the power of a quant screen taking out the emotion and buying a proven strategy that outperforms the market index. And also, it simply adds net return for our portfolio overall. And I think that you had mentioned with your Quant Screen 1 in the private group that it had gone up, I think 5% last week.
Yes.
Approximately.
Yes, it did. It did. We have a Quant Screen 1. We're just calling it 1. We're going to come up with a more catchy name, I hope, at some point, because numbers aren't as catchy. But yeah, Quant Screen 1, I had to use a Folio investing, which is a online broker that lets you basically do these quant screens like you should be doing. And yeah, I think I did about 3 weeks ago, and we were up 5%. It was quick. It was fast. I was shocked. What I liked about it too was, this quant screen, I think we try to hold about 20 names. It could be one up or one down depending on how the screening is going for the week. But yeah, it was dynamic. It was fast. I get the names. I sell the ones it tells me. I buy the new ones. There's no emotion, no looking at charts and trying to read the latest news. The quant screen, did their job. I mean, it worked really well. Now, I don't think, Todd, I know definitely we're probably not going to introduce the concept or the idea of quant screens down at DividendLab. We're just, buying the stocks and selling them, but that wouldn't happen.
Correct.
I didn't know about Big Deal. I didn't think we were probably going to do it for Big Deal either.
No.
So it's probably just going to be confined to the private group only. But there was so much talk about it, feeding through and bleeding onto the forums. I think we just had to address it.
Well, Mike, I think that we learned, and you could tell me your experience doing option rolls, the time that is involved in
Yes.
the option rolls. What is your experience doing the option rolls and doing the time involved based upon what we're doing now, after this past week? What
have I learned?
Yes.
Yeah. Well, I mean, trying to do the option rolls in conjunction with quant screen kind of adjustments, is tough. I mean, it's challenging. When we do the option rolls, it's interesting because people just think, oh, you just look at it and roll to the next strike or roll to the next month. Boy, there's a lot more to it than that. When it's time to roll, there's so many things to consider. You got to consider. You have to look at the charts. You got to look at any upcoming news or catalysts. You got to look at the earnings. You got to look at what the option chains are just trying to tell you in general. Not necessarily the next weekly out you might roll to, but what you're seeing in the next month or 2 months. Reading into those chains, what you think can happen. So it's not rolling is difficult, and when you're rolling a portfolio of even just 10 positions, it could take a while. Magnify that times 30, 40, 50 positions, and it's challenging, so it's not the easiest thing to do. But
so it took like an extra hour during the week for you to do the option rolls. Is that fair?
Okay. If it only took you an extra hour, then there must be something really wrong with me.
Or 2 hours,
Maybe.
an hour and a half, 90 minutes, something.
Yep.
But no, it just.
So.
I mean, there's so much time involved that one is weary.
Mm-hmm. Yeah. So to get back, let me bring us back to quant. So I mean, if you're really interested in quant and you want to find more, AAII, we'd probably go take a look there. They have free quants that you can look at. If you really are just want to get into it, we can obviously talk to people. I mean about private group stuff, but we're not going to introduce that into a big deal. That would just be an overload for that at this point in time.
Okay, Mike. So Mike, you're saying that people can contact you on for the private group and get information on the Quant Screens. Yeah. Okay. Yeah. I think I interpreted your answer correctly, because it's only taken you an hour, to do some of these things. You have free time to answer questions and such, and I think that's excellent.
All right, well, that concludes our podcast 4 for the Big Deal Group, and stay tuned next week for podcast 5. Thank you very much.